Good afternoon, good morning, or good evening, depending upon where in the world you are watching this from. Welcome back to Afternoons with Aces. This is the implementation series, session 5 of a Plan 10, Nail the Accounting. Let's go through our agenda real quick. We will, of course, start with introductions to the two aces giving this session. We'll give a series overview. We'll talk about the top implementation mistakes that we see. The implementer, what are you there to do? ERP accounting modules, what modules generate the accounting in a typical Oracle Cloud implementation. We will discuss what it means to be accountable. A little pun there, play on words, if you will. And then we're going to talk about understanding what should happen during the implementation and for the accounting. And then my counterpart, Lee Briggs, is going to take a slightly deep dive into the Reconcile feature, which is available in Oracle Cloud ERP. From an introduction standpoint, my name is Thomas Simkiss. I have been an Oracle implementation consultant for the most part since 1998. I did have a brief stint and as a straight job when I worked for the American Institute of Certified Public Accountants as their executive vice president of ERP systems. I got my BA from Ursinus College in Economics and Business Administration. My Juris Doctorate degree from the James A. Beasley School of Law all the way back in 2002. I'm an Oracle ACE professional, have been that since 2014. I got my OATUG Star Presenter of the Year in 2017. I'm a certified public accountant in the state of Pennsylvania, and I'm a member of the Pennsylvania, New Jersey, and American Bar Association. And I'm currently the Senior Vice President of Revenue for a consulting organization based in New Jersey. Lee?
Good morning, afternoon, evening, everyone. My name is Lee Briggs. I've worked with the Oracle app since 2001. I started all the way back on release 11.0. And I've been working with the apps ever since then, EBS all the way through till 2012. Since 2013, since cloud's been generally available, I've been focused exclusively on the Cloud Fusion applications. I got my degree in accounting and finance from the University of Leicester back in England. I got my master's in management studies back at the University of Northampton, also back in England. And I got my Oracle ACEness, the name for the series, I guess. I got my Oracle ACEness in 2013. Kept on to that. That's something we have to earn every year. So I've kept that from 2013 all the way through to now. Like Tom, I was OATUG Star Presenter of the Year. Unlike Tom, I was the first one to get it and the first person to actually get the award at all from OATUG. So that's a little bit about us. So, sorry, last one. I am an architect, a solution architect, currently for a consulting company that is based out of DC. I'm actually in Pennsylvania, but we're based out of DC.
All right, series overview, Lee.
Yeah, so we started this series really looking at tips and tricks that we've learned over the last 25 years or 50 years combined, going back to eBusiness Suite 10.7 all the way through to the Fusion apps, Fusion 25C when we started writing this, 25D at the time of recording this session. And we really looked at the 10 main areas that we can focus on. So we looked into what defines success, trying to, how we've always approached implementation, so using reports to actually get the requirements out of the system. We've used those requirements to drive our testing, so we can make sure that we have something that is repeatable, something that is traceable, so we can make sure that every test case at least hits one requirement out there, maybe more, but we have some kind of mapping. We've talked through conversion mappings and validations, the tips and tricks we've used for those all the way through. Today's session is Nail the Accounting, and then we have 5 more sessions coming up. So we talk about the process playback, really it's the old term used to be conference room pilot, but we'll talk through running process playbacks. We'll talk through what you actually need to do for testing. We've got a separate session entirely for all our technical interface integration reports. So whether you use the term Chemlease, whether you use RICE, whether you use RICE-W, or as one of our non-technical PMs used to call them, the gazintas and the gazouters, we'll talk through those. Then the final couple of sessions we talk about change management. So it's great doing all this implementation stuff, but actually talking through how it affects your end users and people who don't even use your system or don't know that they use your system. And then finally, lather, rinse, and how do you repeat? So you've done it once, how do you do it the next time? Now that's the series overview. It's 10 sessions. First 4 are you can find online. As we go through these other ones, you'll find them all in the same place. They're all on our YouTube channel, which we'll mention at the end.
Thank you, Lee. Real quick, not as many views on this one as we would like, although we are getting more. I am getting a lot of pings on LinkedIn from not only consultants but also customers. We do say this quite a bit. If there is something that you would like us to discuss, please do reach out. Our Twitter and our LinkedIn accounts are listed at the end. We do take that seriously. These are always better when they're discussions rather than just lectures. All right, so the top ERP fusion mistakes. We're going to start with the customer side. I have been a customer. It was a long time ago, but I will tell you this is mainly from the implementer side. These are mistakes that I see the customers make. I am a CPA, but as I say at the bottom there, for the most part, even if you're a CPA or you have a background in accounting, you are not there as their accountant, and that is a big mistake on the implementer side. But from the customer, and I will say this kind of with a sense of amazement, although I don't know why I do, because I see it really a lot. The customer don't even know what their accounting method is. I have a number of commercial and public sector customers that simply don't know what the difference is between accrual or modified accrual or accrual with encumbrances. I had a customer that was a controller, very nice person, really, really smart, but could not articulate their accounting requirements. And what it really was is they were standard accrual for payables. What does that mean? It means that when they record an invoice in their system, they get a debit to an expense or an asset depending on what they're buying, and they get a credit to accounts payable. Right? Tried true mom and apple pie. But on the receivables side, they did not record any revenue until they got the cash in the door. So that is traditionally what we would call, if it was just receivables, that is traditionally what we would call cash basis accounting. When you combine accrual accounting on the payable side with cash basis on the receivable side, that is what we would call modified accrual. Now, it's great that I know that, and I know a lot of my consulting brethren know that, but really, Mr. or Mrs. Customer, that is your job to know that. You really do need to be able to articulate that. If you don't, and we have some tips and tricks on this as we get into the slides, but work with your auditors, work with your accounting team. Make sure you know what it is you're doing. Know the difference. Know what your accounts are. I know that sounds silly. You should know the accounting equation. Assets equals liabilities plus owner's equity. Your partner, your systems implementer, as I said, you might get a crackerjack accountant person, which is awesome, but you're probably not going to. You're probably going to get somebody that can, I say and I say that tongue in cheek because Lee and I do this for a living, but if all they can do is flip switches, that's great. Really, that's what they're there to do, but they should be able to give you some guidance, not necessarily on the accounting because that's not what they're there to do, but certainly what the system can do. And that takes me to the implementer side. You should know the differences between the accounting methods, Mr. Implementer. I know you're not there as our accountant, but you are there to guide them. And if you don't know the differences, how will you know how to configure the system to do what it's supposed to do? Know the default accounts and where they are used. I will tell you, on the purchasing side, know when that, and this is kind of an EBS term more than as a cloud term, but know the difference between that expense AP accrual account and the inventory accrual account. Why are there two different accounts? Why is there an invoice price variance account as opposed to a purchasing price variance account? Know when they're going to be hit. If you're going to use clearing accounts, and Oracle, I actually saw this quite a bit. I've been looking at other systems as part of my new role. And Oracle does seem to use more clearing accounts than I think other systems do. That is anecdotal, not factual based, but I like clearing accounts. I do, as long as they clear. And I know that sounds silly, but If they don't clear out, you better know why they don't clear out. You should know what they're used for. And another mistake that I see, and I'll use an AR term, people use the same clearing account in multiple places. If there is multiple accounts in Oracle, and I'm going to give a specific example, don't use the same account everywhere. It's just not a good idea to do it. So know what the clearing accounts are, know how to clear them out, and they generally, your SIs, sometimes they just don't know. So what's an example of where you should not use the same account? And I see it all the time. On the AR side, on account, unapplied, thank you, Lee, and unidentified. Those mean different things. On account means you know the customer that it's for, but you don't necessarily know the invoice. Unidentified means you do not know who it is. You got cash, it's made out to you, you got a check, but you don't know who it's for. And then, of course, you've got unidentified or unapplied. Unapplied means, hey, I know who the customer is, I just haven't applied it yet to the invoice. That account, by the way, is used by default. Whenever you put an account receivable in, you put the cash in, it always goes to unapplied first before it gets to applied. And those accounts matter because each states have different laws on something called escheatment. And again, not getting too technical here, but if you've got cash and you don't know where to do it, you've only got a finite amount of time to put that someplace. So, we're hitting this one hard, this slide. Lee and I see it, all the time. It's just like from a conversational standpoint, whether it's payables or assets, receivables is probably one of the bigger areas where I see folks just put the same account in every place.
The other one that I actually see a lot of times using the same account everywhere is around foreign exchange stuff.
100%.
A lot of the entities that we do business with, especially like public sector, we don't do anything with foreign currencies, just use the same account everywhere. And I kind of get the logic for it, but when something hits that account, and something will, if you're using that as same account in at least 4 or 5 different accounts, and certainly the payable side, same account, accounts over in the receivable side, tracking down where it came from and what's causing it can be tough. At least kind of having a gains and losses account going one place, and the losses maybe going to a different place, or recognized and unrecognized, all that kind of stuff. At least going to the same accounts, even if they're in the same groupings. At least you've got an idea of, okay, I know that account, I know where that's likely to have come from.
It's a great example, actually, and that does bring me to another one. This is not public sector, it's really more commercial, but it is also dealing with foreign exchange rates. So depending on how you've adopted your foreign currency, you can adopt it in such a way whereas if you're operating in a foreign country, you can have their local functional currency as your functional currency. So if you're in Great Britain, you can have your ledger set up where your functional currency is in British pounds, and when you do your translations and revaluations, depending on what it is, it will go to other comprehensive income, which is essentially an account on your balance sheet. But if you've adopted foreign currency in such a way that most of your transactions are in your main currency, meaning most of your transactions are in US dollars, you can actually make an election to, even though your set of books is in England, your functional currency will be in US dollars. But you still have to produce GBP-based reports. And doing that, making that election, actually means that your translation and your foreign currency matters by default should go to your income statement, right? So when you do that, obviously it's a different set of accounts that you're picking, and that is not your decision as the SI to make, but you should know what Oracle's going to want to do. So when you're helping define your chart of accounts, you can give the customer better guidance.
And kind of looking at that area, it is very important when you're doing your implementation, if you have anything that is unique's a bad term because everyone's unique, and but when you have specialized stuff like that, make sure that you have an implementer who knows that kind of stuff. It's the same kind of concept of, if I'm putting in financials, I wouldn't get an HR company to put in financials because they're an HR company. They're going to know HR. They're going to be awesome at it. But maybe financials in their strength. Certainly, if you're doing multinational accounting, make sure that the guy has work with at least two currencies. I mean, you've got to make sure you explore your influence when you do that.
Yep. Actually, before we move on to the slide, I'll give another point on that. I saw an interesting post on LinkedIn the other day, and it was actually by an implementer, and he was lamenting the lack of talent in the Oracle space right now. Folks that put out on the resume that they know things, and then they actually don't. And I kind of commented, well, that's on your job to interview them. This is really for the customers. You have every right, in my opinion, to speak to the people that are doing your project, and you should absolutely talk to those folks and have a brief conversation and make sure they understand, if not about your business, because they're certainly there to learn about it, but what should Oracle do and basic concepts. You have every right to do that, and I would urge you to do that. It'll certainly help to know at the start if you're getting an expert or not. So that takes us to the implementer. What are you there to do? Well, first of all, you're there to implement a system. I know that probably should go without saying, but that is what you're there to do. You're there to put a system in place. You're there to train them. You have to make sure that the users can use that system. Now, I'm not going to get into whether you're doing train the trainer or train the end user, or that's part of your methodology and whatever you bid for the customer. But I would tell you, make sure you understand what your scope is and what you are there to do, and hold yourself and hold your team accountable. Report. Make sure the system produces correct, reportable, and auditable results. And I would tell you that is probably one of the main things that you're there to do. And that is not just for a financials implementation. Whether it's HCM and you're doing core HCM only, you have to be able to produce, the client has to be able to produce reports, active employees, old employees, whatever it happens to be. And we actually did our last session on this, is using reports to drive requirements. It really is a logical thing to do. And using those reports and understanding how they can drive requirements and how they drive your stakeholders is a great tool. It's a great process, and it's a good way to drive the project. Maintain. Make sure the users can maintain that system. I really view this as part of training. Now, I will tell you, I have a very distinct view on this. Lee and I do, because we've worked together through so many different companies for so many years. There are certain things I believe that you are there to show the customer, and certain things that I don't. I'll use a financials term, which is, chart of accounts. The customer should absolutely know how to maintain their chart of accounts. Add new values, add them to the tree, add them to the hierarchy. Make sure that they have the appropriate attributes assigned to them, and how to use those things. Should you show the customer how to create a new business unit? In my opinion, no. That's an implementation task. Your job as the implementer is to make sure they can maintain the system. It's not to train them on how to do a whole implementation. That's my opinion. That and $1.50 gets you a cup of coffee. But there are certain things that happen quite frequently. Setting up a bank account, setting up a user. Those things are really care and feeding. And I think it is your job as the implementer to make sure that the customer knows how to do that. What I try to do when I actually used to do this for a living, I would always try to have mini sessions throughout the project rather than waiting to the end, right? So as I was going through and doing my configuration validations, I would have mini lunch and learn sessions. It's a terminology that my prior company used to use quite a bit. It's one that we got from other companies. It's a pretty common term, but 1 to 2 hour session over lunch, over a cup of coffee, to just show some basic things. And now that you can record and that AI is a thing, you can upload these videos. Lee and I do this quite a bit, but you can upload them into a vector database and just slap a search engine on top of it. And invariably speaking, and I'm going to sound like an implementer again, you're going to get the question, we never saw that, right? How many times do you hear we never saw that? And if you do it throughout the process and do it throughout the cycle and document it, the users can maintain the system, and they'll have a much better shot at executing a good process playback, which we'll talk through later. And the last thing, and then I know Lee's got a couple things to say on this, You are there to make a buck. The client should understand that. You should understand that. Now, the negative about that is, and again, this is something that I say repeatedly. Unfortunately, that dynamic pushes you into a adversarial stance. I don't necessarily mean that in a bad way. It's just, the customer is there to get as much from you, the implementer, as they possibly can for the least amount of money. You are there to get the most amount of money for you or your company, and there's nothing wrong with that. That is not something to be ashamed of, but you do have a moral and professional obligation to act in the customer's best interest, make sure that you're doing your job that you signed up for, and making sure that you're holding the customer accountable. Lee?
Yeah, I just want to go back to that the thing about maintenance of the system. I always try and show that what I can during my conference room pilots, my process playbacks, especially when I've got detailed requirements. Definitely in the public sector, we get requirements to everything. Some of the RFPs you see out there have got like 3,000 requirements that they need to be. And one of them is always going to be the ability to add a new account value. Great. We go back to one of our earlier sessions, harken back to that requirements to test case. We've got the requirements. I'm going to have a test case. If that's a requirement, I need to be able to add a chart of accounts value. Now I'm going to have a test case for adding a natural account, adding a fund, adding a cost center, whatever. And I'm going to make sure they see it in those sessions. So you're actually kind of melding the two. I've got my requirements out there that they want to be able to do that. And I've been able to track back from the test case to the use case to the requirement all the way through there. I've been able to track back, yes, it was one of your requirements. I've shown it to you. I've shown it to you in this session. You've agreed to it. We've marked it off as green, everything passed and all that kind of stuff. I've actually gone through that stuff as requirements rather than just, hey, I'm going to show you how to do this. You wanted to see it. You had to see it. And you've got through these process playbacks, you've got through SIT, systems integration testing, you've got through user acceptance testing. You have to have seen it. There's no way you can get through there. As Tom said, all this stuff is important out there. You've got to have, a system. You can have the greatest system in the world. If no one's been trained on how to use it, it's useless. If you can't get the reports out that you need, it's useless. If you cannot maintain it, and that's not just, I can add a new value. It's okay, you want some really confusing accounting or really complex accounting that you have to go through and build up subledger accounting to be able to do this, and every month you have to go in here and change all that stuff. Yeah, is that really a solution you can live with, knowing that every month you have to go and repeat 120 things just to get these reports out? Or is there maybe some kind of compromise we can make, maybe a change of requirements, maybe a different approach to be able to do this in such a way that it's not onerous on the person doing the maintenance to actually get the system up and running?
Thanks, Lee. With that, we're actually going to talk about the modules within ERP that generate accounting. So, this slide here, this is based upon what Oracle has, and it's, I think, as clear as it can be made within a slide. But firstly, this is intended to demonstrate the best practices, right? So this is generally speaking how Oracle recommends you close your modules, and also how the flow of information goes through the system, right? So from a close perspective, you want to clear as much expense reporting as possible. Enter your expenses early, get your employees to enter their expenses, get them in, get them approved, and get them to payables prior to the close. Now, one of the things that I'm doing as we do this series, I'm actually writing a series of blog posts to try to expound upon some of these concepts in writing, I guess more than we can do in a webinar. But when you're doing these projects, and this was really the first session that we did, was how to define success, right? So if you say at the start of your project, we want to close 33% faster, or we want to close in 5 days or something, you want to be specific. You want to be measurable, which is we're gonna have the days, we're gonna say what we're gonna do. But more importantly, how are you going to do that? If you are closing in 15 days now, why is it taking you that long? What about this new system or this new process is going to improve that? You really do need to answer that question. And when you answer that question, it will help you with your close process. So from here, what are we doing? What are we talking about? Understand which modules generate accounting. So expenses, it generates accounting that flows into payables. You do need to close payables before closing cost management so that you can do your PO accruals, right? So it's always been that way. At least it's always been that way in EBS, and it's that way currently in Oracle Cloud. You got to close payables first. That means you're not going to generate any more AP invoices. So you can go over to purchasing, finish your receiving, and then generate your period end accruals. You want to close payables before you close fixed assets. Again, that ensures that your invoices are completed. You've run create accounting, and that is a key component, was a key component in EBS. It's still a key component in cloud. You have to have final accounting run. It's got to be posted to the GL before you can move stuff over to fixed assets. Bear in mind, if you've made a mistake, that's perfectly fine. You can always fix that accounting at a later period. That's why we have clearing accounts. It should be hung up on the balance sheet. If it shouldn't be an asset for whatever reason, you can generate journal entries. That's why we have them. So make sure that you are accounted and you follow that process. If you're creating leases, yes,
Okay.
exactly. If you're creating leases, your invoices must be interfaced to payables, and they got to be paid before closing payables, right? So again, it's kind of circuitous, but you've got to have your leases created. You have to have those leases accounted for, sent over to payables. That finalization, if you create your assets, then create your lease, that'll create it for the next period. You want to close payables before closing projects. You want to ensure that everything is accounted for. Now, in implementations that Lee and I traditionally did together as a team, whether you're public sector or whether you're commercial, I always followed a process where if I was putting in projects, I would change my accrual in purchasing so that it was accrue on receipt. Why would I do that? Because if you don't accrue on receipt and you get a project-related receipt, the expense for that will not hit the project until you get the payables invoice, right? And that is really impactful to your project managers and your project costs. The benefit of turning that accrual on receipt is when you get that that receipt in purchasing, it flows right to projects, you get your expenses. It does change the way you do your analysis a little bit in the general ledger, but I've kind of learned how to train my folks in order to do that. Once you close your cost management module, you want to do that before closing projects, so the project-related inventory transactions are in there, right? So you got to close payables first before you close projects. You got to close costing before you close projects. So you get all your costs over there. That's super important if you're doing capital projects. It's important even if you're doing expense-related projects that have costing in them. Then you want to transfer everything from projects to fixed assets. Okay, so now, if you're doing work in process, if you're actually capitalizing the project, all of that flows. It'll clear out your assets clearing account. And these things take time. And again, as Lee will talk in some of our other sessions later on about process playbacks, and I will tell you, I've heard this criticism, I guess is a better way of saying it, enough to know that it is valid. Too many times in process playbacks, our consultants and our teams focus on the individual flow, whether it's supplier invoice to payment or requisition to receipt. I hear the customers say quite often, we have never seen it end to end. And invariably, that usually is a true statement. We might think we have as a consultant because we understand how the process works, but going through this cycle and knowing what you have to close first and why is super important. And does that mean you have to execute every transaction in the CRP? No, that's really hard to do. That's going to take a very long time. But certainly before the end of your process playback or the end of your competition pilot, should you have a single session that goes through all of the transactions that occurred? The answer is yes. And the easiest way to do that is to pick an individual series of transactions. And I'm going to speak from a ERP perspective because it is my skill set, and flow it all the way through. Start with that requisition that you put in. Show the accounting on it. Open that purchase order that was created from their requisition. Show the accounting. Is it the same? Is it different? Did you have to change for some reason? Did you change your quantities? Show the receipt. Show the accounting. Is there accounting on the receipt? If you're not public sector, you're not doing accruals, there won't be. But if you're commercial and you're doing projects, there is going to be accounting. It's going to be meaningful. Show that it went over to projects. How can you do this? You can do it with screenshots. You can pull the transaction up in the system. That, by the way, is my preferred way of doing it.
Mm-hmm.
You can use it to create an accounting report. Show that transaction. So, hey, look, here's that same requisition account. It was on the purchase order. Look, it hit projects to that account. It hit payables. Show it in the general ledger. The other way you can do this, and again, I do this because I'm a financials guy, I will often start with the base transactions, flow it forward, and then I'll go to the general ledger and I will flow it backwards. Meaning I'll use the drill down capability. Hey, look, remember that invoice we saw? Here it is in GL. That is the best way to do it, in my opinion. Process all your sub-ledger transactions. The other thing I would tell you, it's not on this one, but I really, really think it's important. There's a really good payables to general ledger reconciliation report. There's a really good receivables to ledger reconciliation report. Run those processes. That is not just as part of your period end close process playback. It really should be as part of your session for how you close the system. Is there a default reconciliation report in assets? There's not. Is there a default reconciliation report from project accounting? There's not. There's some tieback reports, but there isn't a specific reconciliation report. You as the implementer need to show that process, whatever it's going to be, whether you're running account analysis reports, whether you're running trial balances, but have that process down and show it during the process playback sessions. It does a few things. One, it makes sure that you have tied everything out. B, it makes sure you've run all your jobs. And C, it makes sure that you understand what's happening. And B, you can explain it to your customer. Or C, sorry. The letters went out of order. Sorry, go ahead, Lee.
So the other thing that I find is really helpful for this, and this goes back to whatever your methodology is. The methodology where it's used, the first kind of week you're doing process familiarization, where you're getting people in a demo instance so they can process stuff. I want to show that reconciliation stuff there. Again, it's not going to mean anything, but more importantly, it's not going to reconcile. It's great getting into these process playback sessions where you show, and we've done everything in payables, and let me run my payables to general ledger reconciliation. Look, it reconciles. That's great. Mom and apple pie, it should be right. But you've got to show when it doesn't work. And the greatest part for that is a demo instance. We all know that people don't keep the demo instances up to date. They don't post periods out. They've got journals that can't be posted because periods aren't open. That's what you need to see. You need to be able to see, yes, I have $1,000 in accounts payable. I have $900 sitting in general ledger. There's a difference of $100. Click on that difference. Show me what it is. Show me what how I need to fix this. Fix it. Run the process again. You're going to see it drop out. So it's great showing it reconciles, but it's even better to show it doesn't reconcile because it takes you through what do I need to do. As Tom said, payables has got the payables to general ledger reconciliation report. Receivables has receivables to general ledger reconciliation report. Fixed assets, there isn't anything. I always go with the journal entry reserve ledger. That's the golden report. That shows you everything out there. And it's just knowing these reports. That's the one you're going to use. You use that. You want to see something different on that report. You want to change the look and feel. That's all well and good. We'll take care of that in a later session. But those are the reports that you're looking for to be able to show that all this stuff reconciles out.
Thanks, Lee. All right, that kind of gets us to the next slide, which is be accountable. If it's your module that's generating the accounting, you have to make sure it's right. Okay, but, and I did hit this in one of our other sessions, and again, I will tell you, I'm being self-critical, not only of myself, but also of, firms that I've worked for in the past and currently work for now. These implementations, right, wrong, or different, they just tend to be way too siloed. A lot of folks that I work with, I'm on order management, my job is to get the order over to receivables or to get it out the door, and that's it. I don't generate any accounting. That is the wrong attitude, and I just don't agree with it. if you're in order management, a lot of the things that you capture will drive the AR accounting, whether it's the transaction type or the sales rep or the item on the order. They can and are usually used to drive the accounting. So you need to be accountable and work with the accounts receivable person to make sure that not only did the invoice get there, is it correct? And you have to involve the accountants, you have to involve the customer. I know I said this earlier, but I'll hit it again. It is not your job, in my opinion, to figure out the journal entry. It's the customer's job. The customer should tell you what the journal entry should be. Your job as the implementer is to make sure that the system generates that journal entry. And you got to make sure that you do different scenarios. Again, I gotta see this so many times. That my implementation team will use the same item over and over and over again and use the same customer. That is a terrible thing to do. You might get it right for that single item and that single customer, but you didn't do enough unit tests to make sure you got it right for other things. So own your module, and you got to make sure it's right. But then you got end to end. You have to make sure you can process the thing all the way through. That gets back to what we talked about on the last slide. Go through that end-to-end processing. Don't wait till the end to review the accounting. Again, that's another one that I did when I actually did this for a living during my lunch and learns. I would review the accounting and hit on it a lot so that when I got to my process playbacks, it was really a rubber stamp. Look, we reviewed it multiple times and the customer felt good about it. Know what the transactions generate and have an idea of the accounts that you're going to need. From a fixed assets perspective, again, if you're going to use the same clearing account for every asset, and I do that, I must confess, I don't use a different clearing account. I did that when I was younger and it was more trouble than it was worth. But know when that clearing account is going to get cleared out. Know that if you're hitting furniture and fixtures, that should be a different asset account than leasehold improvements. If it isn't, you got bigger problems. But I digress. But know what those accounts are. Know when they're going to be hit. And that really gets to kind of the point of being accountable and understanding what you're responsible for, what your customer's responsible for, and what your team's responsible for. Lee?
So one of the things I try to instill upon folks that work for me is when you're going into these process playbacks, you've got to know that the data you're putting in during that session is going to work. So you know that this is going to be an invoice. It's an invoice for $1,087.50. I know it's going to be that because it's $1,000 line. I know there's going to be tax on there. It's going to be for this supplier and this supplier site. I've got my transaction, my invoice number on there, whatever. But a great way to make sure you can get all this and show all the accounting both in the system and at the end is to run a transaction all the way through before you get to the session and take screenshots of the output of every create accounting for that transaction and put a slide on there so all your accountants in the room, and it will be accountants that want to see this, can essentially see this T counted out. There's a requisition. So I'm going to have a commitment if I'm doing encumbrance accounting. Okay, it's turned into a purchase order. It's going to reverse out the commitment, turn it into an obligation. Here's the here's the receipt. Now it's actual stuff. Here's the invoice. It should be hitting my accrual account. Here's my payment going out there. But having all of those transactions on there, and you can physically see on one slide, yes, I've seen all the accounting. I want to run the person through, the transaction through step by step. So let me enter an AP invoice, run create accounting. Do you see the output? But I've got a slide that summarizes everything with the same amounts and the same transaction names so the person can actually see out there, yes, I follow that. That is correct. It makes it so much easier for you rather than I didn't see the accounting all the way through there. Yes, you did. I've shown it to you. I've shown the slides out there. The client wants to take you off script. We'll talk through that in the process playback. Okay, I can do that because I know that my system's going to work, but I still have this is what I'm planning to show you. This is the output of what I did show you all the way through that.
Thanks, Lee. Okay. Last piece before we get to the reconciliation feature, which Lee's going to walk you through, is understand what should happen. This is really similar to what we've said before. You are the SI, you're not the accountant. The accounting should come from the customer, but you should understand what happens when. I'm going to use an example. And I got this from a client that I worked on where the person implementing project accounting was kind of adamant that they weren't responsible for the revenue accounting. That was AR's job, and even though all the information that they needed to generate the revenue was in projects, they pawned it off. And it was really disappointed to hear that, and they put a lot more work on the implementer. And this is my opinion here, but if you're putting in projects and you're billing things, you have to control the revenue. What project type is it? What are you billing? Is it reimbursable? Is it non-reimbursable? Is it controlled? Is it not controlled? So understanding what should happen and when, that is the SI's job, and that is your job as the process owner. And you really do need to work with your other consultants and what makes the most sense, and kind of be opening. And this is really actually important too, especially if you're implementing revenue management. Revenue management does a lot of cool things, I think, on the order management side, and you kind of have to have it. I think revenue management with projects is really a pain in the neck. I'm not a big fan of using it. I'll give you a kind of an exception to that. If you're using revenue management, and I got a lot of customers that have projects and order management, I do like to turn it on only because it's a single source of truth for all your revenue, so that you know that your revenue clearing, if you see a revenue getting hit from receivables, or you see revenue getting hit from projects and you're using revenue management, you probably did something wrong, right? Because those accounts should come from revenue management. So, really understanding what should happen, and you, the customer, you have an obligation to yourself and to your team to ask questions about what should hit and when should it be hit. And hopefully your SI knows what they're talking about, and if not, this is a great reason that you can have another consulting company in there to ride shotgun with you and be your advocate. I've done that a number of times where the SI is not my firm, but I'm kind of sitting on the side of the customer and being their advocate and kind of helping them ask the right questions. It's certainly something that you can consider.
So one of the neat ways of doing this from a consulting point of view, again, you're not there to tell them what the accounting is. You can at least give an idea of what it should be. So the terms I always use are accounting class. When you create accounting, any output you see out there is going to have, the transaction details. It's going to have the currency, debits and credits, whatever. It'll have the accounting class out there. So what type of account am I trying to hit out there? And it's Oracle terminology, and we kind of have to explain that to a little bit of the customer. But from an AP point of view, from entering an AP invoice, debit item expense. Yes, it could be an asset account, but it's item expense. Credit and liability. When I have that payment, just knowing those terms as they come out there of the type of account it is, and it's no secret. It's actually in the name of the report. So it's not like you have to go too far from there, but at least you can kind of explain where it is coming from. That also helps when the customer says, yeah, I don't like that account. It needs to be something else. Great. I know when I need to modify this, probably going to happen in subledger accounting. That could happen in a transaction account build, a transaction account definition. Two different tools to use this. I'm going to come back to that in a second if Tom reminds me. When I go to my subledger accounting, once I found the specific flow I'm looking for, it actually breaks out. These are the different accounting classes you have out there. This is how I'm deriving it. This is a combination. This is if there's any overrides. At least gives you a starting point for, I know which account, which line I'm at least trying to modify and what I'm going to put over there. The part about transaction account builder, transaction account definition, and subledger accounting. I've been into numerous clients where they're already live with another implementer, where the client has started doing stuff with both transaction account builder and subledger accounting for the same module, for the same flow out there. So I'm generating a purchase order, I'm generating the expense account, and I'll do stuff in transaction account definition to start trying to build something if the user is, that the user will have either predefined out there when they go in and they're just overriding something, but then they'll use subledger accounting to go and change that. Once you start having two moving parts going on for the same kind of stuff, it's making your life so complicated out there to figure out what went, why something is going wrong when it looks like it should be right. So, the way I've always tried to look at it, try and help the user first, then worry about the accounting. Get the account combination right. If you're saying, for the requisition, it should come from my home cost and from my home combination, and then it's going to change based on the item category, or purchase scheme category. Great. Transaction account definition will take care of that. You shouldn't have to worry about anything else. But as soon as you start doing the subledger accounting, folks are going to start seeing accounts hit that they didn't put in there, and it's just going to get confusing for them. To try and keep it as simple as you can, change one thing only if you can.
Okay. Lee, let's talk about the Reconcile features. So we've got a couple slides on how to set this thing up and what it can do and make your life a little easier.
Right. So this Reconcile functionality that we have out there, it allows you to actually match journal lines to a specific account and actually say they're reconciled or not. So at the base level for this specific account, look for an amount coming in, being debited to this account. You see the same amount being credited out, it reconciles, get rid of it. It is great functionality. So that is the base level. We're going to go into a little bit more detail about that, but it'll show us being reconciled. For these clearing accounts that we have out there, this functionality is awesome because it makes sure that if you have any balances stuck out there, you know what it's from, you can see what it's from, and hopefully it ties back to the subledger, to the subledger itself to show the that it ties to those transactions. So the use cases I see out there are for clearing accounts, right? We've talked through a few clearing accounts we have out there. So fixed assets clearing account, as Tom said, he uses one account everywhere, one natural account everywhere. I try and be a little better about it. At least I'll have one for CIP clearing and one for asset clearing. I do have clients who say, no, I want a separate account for everything. That way, if I code it to vehicle clearing account, it's going to go to vehicles. I know that it's going to go to vehicles. It makes my life easier. Okay, talk me into it. For my unbilled AR, for my unearned AR, again, the use cases for those make it so clear. Yes, I'm showing that I've got unbilled AR and I've billed it now, just to be able to see that yes, that one ties. We're completely good as we go through there. It's a similar functionality to reconciling cash accounts with bank statements. Now, again, if you're using cash management, maybe you don't need to go through this unless you're reconciling to journal lines hitting your cash account. In that case, you have to use some of this reconciliation function. At least you have to enable the account to be used for reconciliation, even if you don't set up the reconciling stuff, because at least that way you can put in reconciling references to try and get through that. It is awesome functionality, especially when you're doing like period end close, when you're doing your audit and going through all these kind of items to say, yeah, I'm on top of this stuff. I know all these transactions that are coming through. Tom, do you have any thoughts on that?
Not on this one. Let's talk through the steps about how to turn them on.
Okay. So I don't have any screenshots of this. And really, I think in the blog post we have out there, we might have some screenshots out there. So the first thing we need to be able to do is literally enable account reconciliation. So there is a step in the ledger you have to be able to say, yes, I'm going to use account reconciliation. You also start doing it at the natural account level. There is a flag, so you created a value, description, you said it's summary or detailed, can I budget to it, can I post to it, all that fun stuff. There is a flag out there for, do I reconcile to this account? If you've already said no and you've been using the system for a while, you can change it to yes. It's not a big deal. There is a scheduled process you have to run, inherit segment value, attribute, something like that.
Yep.
That'll push that all the way out there. Again, there's no big danger in doing that. Certainly if you say, yes, I was reconciling it. No, I did set up for reconciliation. I shouldn't have done. No, run the same process. It'll take care of all that. Obviously, reconciled stuff, you don't want to do that straight away. But then we can start looking for, okay, for this specific account, let me start coming up with the reconciliation rules for this. So if I want the system to reconcile it for me, how does it reconcile it? Is it looking for just amounts? So $1,000, it reconciles. Am I looking for tolerances? So it's $1,000, I sent across 1,001. Is that close enough? Absolutely. And I think you can do dollar amounts. You can also do percentage amounts out there. So you're not saying it's 5% difference on $1 million is a big deal. You can get rid of that. You can also, if we don't have documented here, look to pass on additional information within that account reconciliation. So not just I'm using this account and I see $1,000. Maybe look somewhere to find a transaction number, an asset number, an invoice number, something like that, just pass as a separate field so that when it comes across, you can see it is $1,000 for asset 123. It's $1,001 for asset 123. It's within my tolerance. It's for the same transaction. Reconcile it where everyone's going to be happy about that. That's what that reconciliation rules functionality is. Again, I've often seen people just do the manual reconciliation so they can just see the amounts working and then try and, once they're comfortable that the functionality works, then start to automate this. Once we've done our setup, which is essentially step one there, step two is getting to the Reconcile account page. So navigation, you've got a couple of ways of getting to it within the general accounting, depending upon what your security is, whether you can get to it through the period close screens, whether you can get to it through the journal screens, and you're looking for a specific ledger, a specific account or account combination, and a specific period. And you can just go through and check, yes, these two reconcile, these ones don't reconcile. At least if you've done the auto reconciliation, it'll only show the manual steps you have out there. And again, that's a kind of functionality we're looking for. So you put in those criteria. We look at the journal lines. That'll show every line that's hit that account, and then you just start manually matching a debit to a credit and start going through there. The other cool part we have is account reconciliation reports. It'll actually show you everything you've reconciled, and more importantly, everything you haven't reconciled. So you can look at those unreconciled items and check those balances against whatever the inflows are to make sure you agree with that. If you've got items sitting in an asset clearing account, make sure that the balance of that asset clearing account ties back to whatever's in the prepared source lines, I think it is, on accounts payable. Just to make sure that everything is copacetic, everything is agreeing to what's out there. And if there is a difference, you've got somewhere to look. Okay, Tom, that was my manual reconciliation, my automatic reconciliation. What do you think?
I think it was great. I think that really covered it. And it's, as Lee said, it's a great tool. It's if you've never used it before, don't wait till you get to a customer. You go in a demo environment and configure it. Just understand how it works, even if you do it manually. In summary, we're going to talk about nailing the accounting. What should you do as the implementer? Ask questions. If you're the customer, involve the auditors. Get journals from the customer. I will tell you, this is probably the most important thing, especially for payroll. I'm amazed again at how often customers don't know how to record their payroll journal entries. Where does it come from? I don't know. Well, if you don't know, I don't know. So get the journal entries. Understand how you book things. Show the entries early and often. Make sure you check your mappings. Make sure everything's going where it's supposed to be doing. Involve the whole team. It is not a siloed process. Don't wait till the end. Don't just use clearing accounts for testing. Make sure you understand where they're going to get cleared and how they're going to get cleared. And don't not get sign off. I would tell you that's really a more than necessary evil. It's an important thing. You want to make sure you involve your customer, but definitely get sign off that you've done what you're supposed to do. You've shown it, and the customer has seen it.
The important thing with that getting sign off, it protects you and it protects your client, right? So I've gone through all my user acceptance testing. Everyone's happy with the accounting, and we go live, and there is a problem. Now, it's accounting, so I can fix it with a journal entry. But, okay, there's a problem. All right, was this one of our scenarios? Yes, it was. Awesome. Let's go and do that in test. Does it do the same thing? If it does the same thing, the system's working. It is accurate. It may not be correct, but it's accurate. What we need to do is fix it. Okay, fixing it shouldn't be a problem. If it's a one-off, it's not a problem. There's a mapping somewhere or whatever. But having that sign-off that everything in prod is working the same way that it did in that UHC instance, that is your critical part. If it doesn't work at that point, you've missed the setup.
Thank you, Lee. Would you like to know more? If you would, you can contact us both on X. I'm at Thomas Simkiss. Lee is at BT Lee Briggs. And there are our LinkedIn profiles below. And our YouTube page is at Afternoons with Aces. I appreciate everybody who watched this video listening in. Again, you can comment on the video. You can get us on X or on LinkedIn. And we will be back shortly with the next episode. Appreciate your time. Have a great day.
Have a great day, everyone.